Welcome back to Global Monetary Watch. Today is July 29th, and we are taking a close look at several developments that have sparked fresh discussion among followers of the Iraqi Dinar and Vietnamese Dong. Recent conversations across financial communities have centered on reports involving major U.S. banking institutions, ongoing monetary reforms inside Iraq, and broader international economic trends. While many questions remain unanswered, there are also several documented developments worth examining carefully. In today's report, we will separate confirmed information from speculation and explore why these topics have attracted renewed attention among observers of these currencies. For years, the Iraqi dinar has operated within a tightly managed exchange rate framework overseen by the Central Bank of Iraq. Rather than allowing the currency to fluctuate freely in international markets, Iraqi monetary authorities have maintained an official exchange rate while adjusting policy when necessary to support financial stability. One notable adjustment occurred in early 2023, when the official exchange rate was revised as part of a broader effort to address economic challenges, improve market confidence, and strengthen the country's banking system. That decision reflected long-term policy objectives rather than a sudden market event. Following that adjustment, attention gradually shifted away from dramatic exchange rate discussions and toward structural reforms taking place behind the scenes. Government officials, banking regulators, and international financial organizations increasingly focused on strengthening Iraq's financial infrastructure. These efforts included improving compliance standards, modernizing banking operations, and reducing distortions within the currency market. Although these reforms rarely generate major headlines, they represent important components of a larger economic strategy that has continued to develop over the past several years. Recently, however, investor discussions have become more active once again. A significant reason for this renewed attention involves reports circulating within currency communities about two major American financial institutions, Chase Bank and Wells Fargo. These reports have prompted many observers to ask whether changes are occurring within foreign currency operations that could eventually affect access to currencies such as the Iraqi dinar and the Vietnamese dong. At this stage, these conversations remain largely driven by community observations rather than official announcements, making it essential to distinguish documented facts from assumptions. One important point deserves careful clarification. Neither Chase Bank nor Wells Fargo has publicly announced preparations related to a future revaluation of the Iraqi dinar or Vietnamese dong. No official statements have confirmed that either institution expects a change in exchange rates or has announced new exchange programs connected to these currencies. What has generated discussion instead are reports suggesting that certain foreign currency procedures or operational capabilities may be evolving within large financial institutions. Such reports have not been independently confirmed through formal public announcements. Financial analysts often note that major banking organizations periodically expand or update their international currency services as global markets evolve. Banks regularly modernize compliance systems, improve foreign exchange operations, and enhance infrastructure to accommodate a broader range of international transactions. These updates may occur for numerous business reasons, including customer demand, regulatory requirements, technological improvements, or expansion of international banking services. As a result, operational changes alone should not automatically be interpreted as evidence that a particular currency event is imminent. Even so, observers continue monitoring these developments because expanded foreign currency capabilities can sometimes improve future accessibility for customers. If additional currencies become available through larger banking networks, retail customers could eventually find more convenient exchange options than relying exclusively on specialized currency dealers. Such improvements would primarily affect convenience and market accessibility rather than confirming any future adjustment in a currency's official value. Understanding that distinction helps prevent unnecessary speculation, while allowing investors to evaluate developments within their proper context. Attention then turns to Iraq itself, where the Central Bank of Iraq continues implementing monetary reforms designed to strengthen the nation's financial system. Officials have repeatedly emphasized long-term objectives that include supporting the role of the Iraqi dinar within the domestic economy, reducing excessive dependence on U.S. dollars for local transactions, and improving stability across financial markets. These initiatives have appeared consistently in official communications and reflect an ongoing policy direction, rather than a short-term campaign or isolated announcement. Another closely watched indicator involves the difference between Iraq's official exchange rate and the parallel market rate. During periods of financial stress, these rates can diverge significantly, creating uncertainty and encouraging unofficial currency trading. Over recent months, however, the gap has narrowed compared with earlier periods of market instability. Iraqi authorities have attributed this improvement to stronger oversight of banking activities, enhanced monitoring of foreign currency transactions, and measures intended to reduce irregularities within the currency auction system. These developments represent measurable progress toward greater market stability. The importance of this trend extends beyond Iraq's domestic economy. Economists generally recognize that maintaining confidence in a nation's currency requires consistent internal stability before broader international developments can occur. Stable exchange mechanisms, effective monetary policy, and credible financial institutions all contribute to that objective. For this reason, many analysts view Iraq's ongoing banking reforms and efforts to strengthen exchange rate management as meaningful indicators of institutional progress. While these measures do not determine future exchange rate decisions, they establish the financial conditions necessary for sustainable monetary policy over the long term. Another key factor frequently discussed is Iraq's substantial oil sector, which continues to serve as the country's primary source of government revenue. Income generated through energy exports plays a major role in supporting Iraq's foreign currency reserves and overall fiscal position. Because oil prices fluctuate in response to global supply, demand, and geopolitical events, these revenues remain an important variable in Iraq's broader economic outlook. According to recent official communications, Iraq's reserve position has remained comparatively strong by historical standards, providing monetary authorities with valuable flexibility as they continue implementing financial reforms. These reserve levels are significant because they contribute to the central bank's ability to support monetary stability during periods of economic uncertainty. Strong foreign currency reserves enhance confidence in a country's financial system and provide policymakers with additional tools for managing exchange rate policy when necessary. Although reserve strength alone does not indicate that future policy changes will occur, it remains one of several fundamental indicators regularly monitored by economists evaluating Iraq's financial position. Combined with continued institutional reforms, these developments help explain why international observers continue following Iraq's monetary progress so closely. As attention continues to grow around Iraq's financial reforms, another important aspect of the discussion involves the country's cooperation with international financial organizations. Over the past several years, Iraq has worked closely with institutions such as the International Monetary Fund, the World Bank, and various U.S. financial authorities to strengthen its banking system. These partnerships have focused on improving transparency, enhancing regulatory oversight, and modernizing financial practices. Rather than representing isolated projects, these initiatives form part of a broader effort to align Iraq's banking sector with internationally recognized standards that support long-term economic stability. One of the primary goals of these reforms has been addressing weaknesses that became evident during previous periods of currency market disruption. Several years ago, Iraq faced challenges involving dollar shortages, unofficial currency trading, and weaknesses within certain banking channels. In response, authorities introduced stricter compliance measures designed to improve accountability and reduce opportunities for financial misconduct. International advisors have continued supporting these efforts by providing technical expertise aimed at strengthening banking supervision, improving anti-money laundering procedures, and increasing confidence in Iraq's financial institutions. Although these reforms may appear highly technical, they play an essential role in the country's overall economic strategy. A modern banking system requires reliable compliance procedures, transparent financial reporting, secure payment infrastructure, and effective regulatory oversight. These components help build confidence among businesses, international partners, and financial institutions operating within the global economy. While such improvements rarely attract widespread public attention, they often represent the foundation upon which larger financial developments are built over time. This broader perspective is important because discussions surrounding the Iraqi dinar often focus almost exclusively on exchange rates. In reality, exchange rate policy represents only one element of a much larger financial framework. Before any monetary authority considers significant policy adjustments, numerous economic conditions must first support that decision. Stable banking operations, adequate reserves, regulatory compliance, healthy government finances, and confidence in financial institutions all contribute to maintaining long-term currency stability. Analysts therefore continue monitoring these underlying reforms as closely as any discussion involving exchange rates themselves. Viewed collectively, Iraq's recent initiatives illustrate a pattern of gradual institutional development rather than isolated policy announcements. Improvements in banking supervision, ongoing cooperation with international organizations, stronger reserve management, and efforts to stabilize domestic currency markets all contribute to a broader modernization process. None of these developments independently determines future exchange rate policy. However, together they provide useful insight into the direction Iraqi policymakers have pursued as they continue strengthening the country's financial system through long-term structural reforms. Alongside discussions surrounding the Iraqi dinar, another currency frequently mentioned is the Vietnamese Dong. Although Iraq and Vietnam have very different economies, both currencies have attracted attention among certain international investors because each operates under a managed exchange rate system. As a result, conversations involving one currency are often accompanied by references to the other, particularly within online financial communities that follow emerging market currencies. Vietnam has experienced steady economic expansion over many years, supported by manufacturing growth, increasing exports, and stronger trade relationships with major international markets. The country has become an important participant in global supply chains, attracting foreign investment across multiple industries. Throughout this period, the State Bank of Vietnam has maintained careful oversight of the national currency while balancing economic growth, inflation management, and international competitiveness. These policies have contributed to Vietnam's reputation as one of Southeast Asia's more stable, emerging economies. Much like Iraq's central bank, Vietnam's monetary authorities manage their currency through carefully structured policy decisions, rather than allowing unrestricted market fluctuations. This controlled approach enables policymakers to respond gradually to changing economic conditions while supporting domestic financial stability. Although the objectives and economic circumstances differ between the two countries, the use of managed exchange rate systems has led many observers to discuss both currencies within similar analytical conversations. Reports mentioning both the Iraqi dinar and Vietnamese dong alongside large American banking institutions have naturally attracted attention. Some community discussions suggest that expanded foreign currency capabilities at major banks could eventually include a wider range of international currencies. However, it remains important to emphasize that no official statements from financial institutions have confirmed specific plans related to either currency. At present, these discussions should be understood as observations circulating within investment communities rather than confirmed policy announcements. Beyond Iraq and Vietnam, broader global financial developments continue shaping the environment in which national currencies operate. Discussions surrounding diversification of international trade, alternative payment systems, and evolving economic partnerships have become increasingly common in recent years. Countries around the world continue evaluating ways to strengthen economic resilience while maintaining productive relationships across multiple regions. These international trends provide additional context for understanding why emerging market currencies receive increased analytical attention. Iraq occupies a unique position within this evolving global landscape. The country's economy remains closely connected to international energy markets, with oil exports largely denominated in US dollars. At the same time, Iraq maintains important economic relationships with numerous countries across Europe, Asia, and the Middle East, including several nations participating in expanding regional economic partnerships. This diverse network of relationships creates both opportunities and challenges as Iraqi policymakers pursue financial modernization while balancing domestic priorities with international cooperation. Because of these interconnected factors, analysts often caution against drawing overly simple conclusions from individual developments. Global financial conditions are influenced by energy markets, international trade, geopolitical events, central bank policies, inflation trends, and economic growth across multiple regions simultaneously. Changes affecting one part of the global economy frequently produce consequences elsewhere. For that reason, experienced observers typically evaluate multiple indicators together, rather than relying on isolated reports or short-term speculation. When examining current developments objectively, a consistent theme emerges. Iraq continues advancing long-term financial reforms while strengthening banking oversight, improving regulatory standards, maintaining significant foreign currency reserves, and working closely with international financial organizations. At the same time, discussions involving major banking institutions and emerging market currencies continue generating interest among financial communities. While these developments provide valuable context for understanding the broader economic picture, they should be interpreted carefully. recognizing the distinction between documented institutional progress and unconfirmed market speculation. As discussions continue across financial communities, another important area receiving attention is Iraq's political and economic timetable. Historically, significant economic initiatives in Iraq have often been introduced alongside broader government programs, budget implementation, or major policy announcements. Rather than occurring without context, financial reforms have generally been connected to larger administrative strategies designed to improve economic performance and strengthen public institutions. For that reason, analysts frequently examine Iraq's legislative calendar, budget priorities, and government reform agenda when evaluating developments related to the country's financial system. Prime Minister Mohammed Shia al-Sudani's administration has consistently emphasized modernization, infrastructure investment, and institutional reform as key priorities. Government officials have repeatedly discussed improving public services, encouraging private sector growth, attracting international investment, and strengthening Iraq's financial institutions. These objectives extend well beyond currency policy and reflect broader efforts to diversify the economy while reducing long-term dependence on oil revenues. Although progress has varied across different sectors, these initiatives continue shaping the country's overall economic direction. The annual federal budget has also become an important reference point for observers monitoring Iraq's financial progress. Budget legislation outlines government spending priorities, infrastructure projects, social programs, and economic initiatives that influence the country's fiscal outlook. While exchange rate policy remains the responsibility of the Central Bank of Iraq, broader government planning can provide useful context for understanding how economic reforms fit within national development strategies. As a result, many analysts review budget developments alongside monetary policy rather than considering either in isolation. Another recurring topic involves the relationship between domestic reforms and international confidence. Countries seeking greater participation in global financial markets typically work to strengthen transparency, improve regulatory standards, modernize banking operations, and build reliable institutional frameworks. Iraq has continued pursuing these objectives through cooperation with international organizations and ongoing reforms within its financial sector. These measures are generally viewed as long-term efforts designed to create a more resilient and internationally compatible banking environment. Within currency communities, reports involving major financial institutions naturally generate significant interest. However, experienced observers often stress the importance of distinguishing verified information from online speculation. Banking procedures, internal operational updates, or expanded foreign exchange capabilities can occur for numerous reasons unrelated to a specific currency. Without official confirmation from the institutions involved, conclusions should remain cautious and based only on publicly available information. Maintaining this balanced perspective helps reduce misunderstanding while encouraging careful evaluation of new developments. When reviewing the available evidence, several documented trends stand out. Iraq continues implementing banking reforms, maintaining cooperation with international financial organizations, strengthening regulatory oversight, and managing substantial foreign currency reserves. Officials have also continued efforts to narrow the difference between official and parallel market exchange rates while supporting greater stability within the domestic financial system. These developments are supported by official communications and represent measurable progress within Iraq's broader economic modernization program. At the same time, reports linking major American banks with the Iraqi Dinar and Vietnamese Dong remain largely based on discussions circulating within investor communities. As of today, neither Chase Bank nor Wells Fargo has issued a public announcement confirming preparations related to a future revaluation or special exchange program involving these currencies. Likewise, no official statement from the Central Bank of Iraq or other government authorities has announced an imminent change in the dinar's exchange rate. Recognizing this distinction remains essential for responsible analysis. This balanced approach is especially important because financial markets are influenced by numerous interconnected factors. Domestic economic conditions, government policy, international trade, energy prices, geopolitical developments, banking reforms, and global monetary trends all interact in complex ways. No single indicator provides a complete picture on its own. Instead, analysts typically evaluate a wide range of economic data before reaching conclusions about broader financial developments. For followers of the Iraqi Dinar and Vietnamese Dong, the current environment offers several noteworthy developments worth monitoring. Iraq's financial reforms continue progressing, international cooperation remains active, banking modernization efforts are ongoing, and economic institutions continue working toward greater efficiency and transparency. Meanwhile, discussions surrounding foreign currency services at major financial institutions have added another topic to ongoing conversations within the investment community. Each of these developments contributes to the broader picture without independently confirming future policy decisions. Ultimately, the most accurate conclusion is that Iraq's long-term financial reform program continues moving forward through gradual institutional improvements, rather than sudden announcements. The country's banking sector has undergone meaningful modernization, reserve levels remain comparatively strong, and authorities continue implementing measures designed to strengthen monetary stability. These documented developments provide valuable context for understanding Iraq's evolving financial landscape, while highlighting the importance of focusing on verified information rather than speculation. For anyone following these developments, patience and careful analysis remain essential. Financial reforms of this scale typically unfold over extended periods and involve coordination between government agencies, central banks, international organizations, and financial institutions. Because of this complexity, individual reports should always be considered within the broader economic context rather than viewed as standalone events. Responsible analysis requires distinguishing confirmed facts from community discussion and recognizing that not every development signals an immediate policy change. That concludes today's report from Global Monetary Watch for July 29th. As additional verified information becomes available from official sources, we will continue providing factual updates that separate confirmed developments from speculation while examining the broader economic context surrounding the Iraqi Dinar and Vietnamese Dong. Thank you for watching, and if you found this analysis informative, consider subscribing to the channel and turning on notifications so you don't miss future updates. Until next time, stay informed, continue following verified information, and we'll see you in the next report.